This is The Morning Drive. It's Mirror Business FM. Dubai's property market staying resilient is the phrase that leaps off of the page of one report at the moment. More than 57,000 homes sold in the first 4 months of this year to the end of April, despite the uncertainty and the geopolitical tensions we've seen. Off-plan properties continuing to dominate. Nearly 3/4 of all sales. So that, relatively flat, that's generally the case. But here to make sense of the resilience, what it means for the rest of the year, perhaps, is Ali Siddiqui. He's research manager at Cavendish Maxwell. It's good to have you here, Ali.
Good morning, Tim. Thank you so much for having me.
It's nice to meet you as well. So, I mean, basically, the start of all of this is that Dubai's real estate market is kind of in a reality of its own. There's no real change, is there?
That's true. That's true. So we saw close to around 57,000 transactions recorded in the first 4 months. Now, majority of those transactions came in during January and February, which were basically record months. Transactions grew compared to the previous year. However, we did see a minor moderation in March and April. Now, the reason for that is something to do with a combination of factors. First, we had Ramadan. We had our Eid holidays as well.
Yeah.
On top of that, we also had a reduction in the number of new launches. Now, what we had seen last year, for example, last year was a record performance, both for in terms of transactions, in terms of new launches as well. We saw close to around 500 new launches every day. So basically 500 units launched every day. When you compare to 2024, it was roughly around 350, 400. From that, when we move into, let's say, 2026, the number of new launches have reduced.
Yeah.
So it's a combination of factors. You can't just basically say that, fine, the numbers in March and April were down due to the current situation in the market, but there were other factors in play as well.
Sure. I mean, there is hesitancy around. Obviously, there is. And there's a point at which I always feel, we talk to lots of real estate connected people on this program, and it felt last year as though, I think at one point there were 3 or 4 launches a day.
Yes.
It was really hard to keep up with. I was just bamboozled by the number of different names. Wouldn't have a clue. So what is it that drives this? There's this kind of persistent appetite for Dubai property. The rest of the world is cautious. Cost of living is high. What is it about Dubai? The UAE, I guess.
So Dubai or UAE or Abu Dhabi for that matter, there are certain factors that have made the market dynamic. Now, there are fundamentals that have always pushed the market. You have world-class infrastructure over here. The connectivity is great. The safety is still here. There's a huge inflow of FDI. There are companies setting up businesses over here. So it's a combination of factors that have pushed investors to come into the market. At the same time, your developers had seen that last year. Developers saw that the number of investors or the number of buyers that were purchasing property over here was crazy. So they thought that, fine, there is appetite in the market, let's launch products. So they kept on launching new products and buyers kept on buying it. That's why, like I said earlier, we saw a record number of launches, we saw a record number of transactions. So it's more to do with, is there an appetite in the market? Yes, there was appetite in the market. There is still appetite in the market.
Yeah. So safe haven status continues, and there's a lot of outside noise about Dubai's safe haven status, but I see that as continuing. So that attracts, I guess, global capital. True. Because the perception is different when it comes to the actual money, I suppose, even though we've got this volatility externally at the moment. How do you contextualize these numbers, this 57,000 new homes against 2024, 2025? Is this a new peak or is this a new plateau?
I wouldn't say it's a peak. I wouldn't say it's a plateau either. So the situation at the moment is too dynamic, right? Okay. Now, in the first 2 months of this year, like I said, we saw a record number of transactions. But then coming to March, coming to April, we did see transactions, when compared to the last year, moderate slightly. Now, like I said, the reason for that being because we had a reduction in new launches and your off-plan segment, for example. Now, majority of the transactions that happen within the off-plan segment are initial sales. So around 80% of off-plan transactions are initial sales.
Okay.
What that means is that there was a sales done directly by developers.
Right.
So if there's a reduction in new launches, your initial sales would go down.
Gotcha.
right?
Gotcha.
So the
Yeah,
resale
yeah.
market at the moment isn't that big. It's just 5% of the market. And you need to reach a certain level of construction completion for you to actually resale that property. So each developer has their own things. Some developers have it at 40%, some have it at 50%, some even have it at 60%. So if you need to keep the momentum going, you need to have new launches.
Yeah.
On top of that, we had Ramadan towards the middle of February. It went on till March. We had our Eid holidays as well. And then the whole situation that started off in March.
Yeah.
So it's a combination of those factors. Now, if you were to, let's say that, fine, the transactions numbers fell down because of the situation, that wouldn't be right. Because your transaction numbers basically have a lag. What I mean by a lag is that the transaction numbers that we're seeing at the moment, it includes a combination of deals that were signed pre-conflict and post-conflict.
Yeah.
Now, for us to definitely say that, okay, what percentage of that is post-conflict is a bit difficult at the moment. That's why if you would want to get a better understanding of what the market situation is like, you would have to wait until the end of Q2. That's when the lag completely gets over, and that's when you would start seeing if there is any impact in the market at all.
And depending on whatever happens in the interim, of course, as well.
That's right. That's right.
No, it's interesting this because it's very easy, isn't it, to attribute one particular quarter to an isolated incident, or it was definitely this, or it was this. But what you obviously have to do is to make the case, well, there is this, but there was also this. And don't forget this. Yeah, okay.
I'm sorry, I'll tell you one more thing what happened. So during last year, we saw 4 months where the transaction numbers fell down.
Right.
So looking at transaction numbers on a monthly basis, we're comparing it month on month, wouldn't be necessarily right because we wouldn't know what has happened in that specific month. Now, we didn't have anything last year, but we did still see 4 months in which your transaction numbers fell down. Does that mean that the market was weak? No, the market still ended with record number of transactions.
Got you. What about demographics of buyers, Ali? Because who's buying now? Is it the traditional? It's kind of always been European, Indian investors. I know I'm using that loosely, but that's kind of been the situation historically. Are we seeing a shift?
Not necessarily. No. So the thing is that while we don't have the exact numbers for nationality, unfortunately, the data that we receive through DLD, for example, doesn't provide the nationality because of safety reasons.
Sure.
But from what we gauge from speaking to brokers or developers for that matter, it's still the same. You have your investors from your Asian countries, such as Indians, Pakistanis, Chinese for that matter, and then you have your Europeans as well. Okay. Now, Asians and Europeans are basically the top two at the moment, and they have been investing in Dubai for the last couple of years, and I don't think that will change anytime soon.
Okay. If it's a really hard question to answer, it's a slightly unfair question, but if you had to gauge what these latest figures, this headline figure of 57,000, it's a hefty figure. What does that tell you about buyer confidence, do you think?
No, in terms of buyer confidence, like I said, the transaction numbers that we're seeing at the moment is a combination of pre and post-war.
Yeah.
Now, the thing is, people are still transacting. It's not like the transaction levels have fallen off the roof.
Yeah.
We still saw close to around 3,000 to roughly 4,000 transactions in the ready segment. And we saw, again, majority of the market was within off plan. So buyers are still investing in the market. What I see at the moment is there is basically a tug of war between buyers and sellers. Now, buyers are looking for great deals. Sellers, on the other hand, are still holding on to the price. Now, I have a really close friend of mine who's a broker who has been in the region for the last 15 years. So he was telling me that he has an investor who's ready to invest in the market, but they're looking for a good deal at the moment, or they're looking for something which everyone in the market calls like a distressed deal, which we haven't seen as such at the moment.
Right.
And I think buyer confidence is still there in the market. Otherwise, you would have seen transactions gone off the roof by now. I mean, have fallen by now.
That's a familiar story, actually. It's interesting. The whole point at the moment from everybody you talk to is, I really want to I could get a great deal now. People are going to be, but there are no distressed deals as far as I can tell. There are some sales. There is a little bit of worry, obviously, but it's certainly not. I don't think you could pitch it as a distressed sale market in any way.
Not at the moment. No, typically your real estate market works on longer cycles. It's not like an equity market where you would see the change happening so quickly. Fine, I get that there is a certain sense of cautiousness in the market, which is true given the situation that we have on hand. Investors, buyers, end users, everyone's a bit cautious. Everyone's planning a bit ahead. Okay, what to anticipate. And again, real estate is not a short-term investment. It's a long-term investment. So you need to understand that, fine, if you're buying a property at the moment, how is it going to perform probably 5 years down the line? Or what return on investment are you expected to get out of it? So it's a combination of multiple things at the moment, I would say. Fine, there is cautiousness in the market, but again, the numbers prove on how much transactions we have seen so far this year.
Do you know what's interesting? Is what interests me is that it's not interesting, and I'll explain what I mean by that. I don't mean that to sound negative. The real story is where the money is going to me, and there's no change in that at all.
Yes. So off-plan,
because it's off-plan, and it's always off-plan, and that 75% figure is that's been pretty constant as far as I can remember, almost.
Yeah. For the last couple of, I think, 2 or 3 years, your off-plan market has dominated the market.
Yeah.
Within April as well, the percentage of off-plan transactions grew more. So it was at roughly around 85%, just specifically in April. So off-plan is something which is more attractive than compared to your ready property, because again, within your ready segment, you need to basically there are 2 types of buyers. One who could pay a cash upfront.
Yeah.
The other option is basically to get a mortgage. So within a mortgage, what you need to do is you need to pay a 20% down payment, and the remaining the bank would cover. Now, off-plan, on the other hand, you could probably just do a 5% payment and then pay the remaining amount as and when the construction progresses. And then you have your post-handover payment plans as well. So at the moment, what we are seeing is that developers are incentivizing buyers more. So they are offering a better deal in terms of handover, in terms of post-handover payment plans, in terms of offers such as waivers on service fees, DLD charges, and all those things.
Yeah. It's interesting this for another reason as well. If you delve into this, there's this level of confidence in the Dubai market, particularly the off-plan market, because intuitively, I would think when times are tougher, when there's more uncertainty, you want to invest in something you can touch. Yeah. There's that bricks and mortar kind of mentality, right? But this is still, the off-plan market is still that little bit beyond that. It's still almost intangible.
Yeah.
But the confidence in this is being demonstrated continually. Yeah. Do you see where I'm going? Yeah. That's the thing that is kind of counterintuitive about this market, almost.
I wouldn't say
kind of.
Kind of, yes.
You know what I mean?
Yeah, but the thing is that you always need to understand that Dubai has more or less bounced back from whatever it has dealt with previously. You had your global financial crisis, you had COVID-19 as well. Now, you would say that the current situation is different from what those situations were. But when those situations initially happened, they were different situations as well. Those were first time as well.
That's a fair point. Yeah.
UAE has always bounced back. Now, off-plan as a segment, like I said, there are multiple factors that have made it attractive. And over the course of a couple of years, those projects will eventually get delivered, right? Now, if you are an investor, what you would look at ideally is the capital appreciation. That is the reason people are still investing in off-plan. You have your attractive payment plans, you have your lower entry points, and at the same time, if you top that off with, let's say, capital appreciation, or by the time you would want to sell your property, the value would increase. That's definitely a good investment decision for any investor. That's the reason it's keeping the off-plan segment too attractive to buyers. That's the reason you're seeing that almost 75 to 80% of the market is still off-plan.
It comes down to common sense in the end, doesn't it? It does. What do you make of the geopolitical tensions in terms of the impact on investor behavior? How would you characterize what we're seeing?
Like I said, your developers have reduced the number of launches. So developers have already approached a wait and see approach. Yeah. Investors on this are doing the same thing as well. So it's a combination of both developers and investors are seeing how the situation evolves.
Right.
If the situation gets resolved as soon as possible, you'll probably see developers introducing more units into the market or launching more products. That would then in turn attract investors as well.
Last year, 2025, was I think we characterised it as gangbusters on here for the market, and there's no doubt that that's true. It was figures were it seemed like there were records month on month.
Exactly.
We've seen some record figures for, real ultra high-end property in the last few weeks, some incredible figures. But it has slowed down. But what's driving demand, even though things are, slightly off the frenetic pace of 2025?
If you're asking specifically for the luxury or ultra luxury segment, the thing is that even with the situation currently on hand, the fundamentals that were there that attracted basically your high net worth individuals and ultra high net worth individuals are still there.
Yeah.
Connectivity was one of the reasons why people invested over here. It's still there. Your tax-free environment, it's still there.
Yeah.
Safety, it's still there. Even with this whole situation on hand, everyone's still there over here. People haven't. If you, let's say you were to go out during peak rush hour, you'll still see the traffic on road. So whatever fundamentals that kept or that made the buy attractive are still in play. It's just that, like I said, investors are waiting and they're seeing on if they can get a better deal in the market. So it's not like they don't have confidence in the market. We were in chat with a ultra high net worth individual a couple of weeks back. So he was asking about how the situation is there, how is the situation on ground. Now, he wasn't worried about what's going to happen to Dubai. He was like, I'm confident enough that the market would bounce back. That's not an issue. What he wanted to know was that how is the market performing in general? So people that are investing over here, they know that they've seen how the market has grown over the last couple of years or the last decade, if I were to say.
Yeah.
And they feel that, it will bounce back again.
I was going to ask, are buyers more cautious in 2026? But I suppose kind of, but there's nothing out of the ordinary here, is there?
No, it's expected.
Yeah.
So the thing is that, fine, there is still a sentiment of cautiousness in the market. Your numbers at the moment wouldn't necessarily tell you that.
Right.
If you want to exactly know that how the situation is like, we'll probably have to wait until the end of Q2. When we figure out that, fine, all the lags that we have within the transactional data gets over, that's when we would ideally come to know that, fine, how is the sentiment like? Is it down? Is it up? At the moment, investors are waiting, are seeing if there are any good deals in the market. But like I said, if there's a good deal in the market, people are still investing.
Yeah, so the sentiment is still positive, isn't it? Yeah, okay. We've seen some pretty amazing decisions in the last, I feel like it's a week, 10 days, to be honest with you. An overhaul in lots of ways in property laws recently. Scrapping of minimum investment amounts for visas, bank accounts for non-residents, just a couple of examples. Obviously, there's the Metro Gold Line as well, so infrastructure development. How much do regulatory changes or the infrastructure development moves contribute to the resilience that we're seeing in the data that you're publishing?
Now, most of the decisions that came in happened in the last couple of weeks. Now, for them to actually have an impact on transaction number would take some time.
Sure.
We were anticipating that there would be changes in regulation. So I was speaking to a colleague of mine last week on Monday, saying that we should hopefully see a few changes in the market in terms of regulation. And then on Wednesday and Thursday, they announced that they would scrape off the upper limit of 750,000 dirhams on a property visa.
Yeah.
Now, Dubai has always been an attractive and a proactive market. So they are quite adaptive to situation. They're quite proactive. So whatever something that has happened in the market, they see, okay, how do we attract more? How do we attract more investment? How do we attract more investors? And that's when your regulation comes under play. There were regulations previously as well. Those supported the market. And if you see at the moment with the changes in regulation or even the support package that was launched by the Dubai government, all those factors just basically tells that, fine, there is confidence in the market, or at least that the government is doing something to basically improve the sentiment in the market.
Which areas or which property segments are performing the strongest?
Now, majority of your transactions, I'll first talk about from a transactional point of view, then I'll talk about from a sales price point of view. Now, in terms of transactions, apartment has always dominated the market because majority of the launches have always been within the apartment segment, and that's not surprising at all. Now, in terms of sales prices, what we had seen in the month of April specifically, so there was a combination of few areas which performed really well. there were a combination of areas that saw a minor decline as well. Now, for example, downtown or Business Bay, on a month-on-month basis, they saw a decline in sales prices. But then on the same hand, you have your villa communities such as the Mac Hills and a few other villa communities where we saw an uptick in sales prices as well. So it's a combination of multiple factors currently in place. So there are certain areas performing good, there are certain areas which saw a decline in sales prices as well.
Okay, and it all balances in the end, I guess,
Exactly.
doesn't it? Did you see? I mean, there were lots of property commentators who saw not a correction this year, and I'm talking early January here, but foresaw a recalibration or a stabilization. There were lots of different euphemisms used, of course. But do you see the market starting to stabilize, kind of enforced stabilization because of events, because of what we've seen in the last 4 or 5 years? I mean, it's been stratospheric, hasn't it?
See, like I said earlier, your real estate market works in cycles, right?
Sure.
There's only a certain limit in which a market can go up. People need to understand that it won't go up for the next 15, 20 years. That's realistic.
I feel like we don't think that way here.
Exactly. So people who think that the market is going to go up to the next 15, 20 years, that's not realistically going to happen because that has never happened.
No.
But what we saw last year was that there was a moderation in growth. What I mean was that compared to, let's say, 2024, for example, the sales price and the rental rate growth ranged between 14 to 16%. We had already seen that moderation happen in the second half of 2025, even before the conflict started. That's basically to do with more of a real estate cycle rather than anything else.
Right.
So the moderation was there. So we had seen price appreciation slow down. We didn't see price appreciation go down, but it was more in terms of how much it was growing, the pace that it was growing. Yeah. So if, for example, in 2024, it grew at, let's say, 14 to 16%, what we saw last year was between 10 to 13% for them.
Okay. What trends are developers watching closely this year? What are developers really looking at the moment, do you think?
Again, like any investors, developers are also seeing how the situation changes. If they...
It's the wait and see approach.
Exactly.
Really.
It's the same for them as well. But that's the reason you haven't seen any new launches.
Yeah.
You're seeing developers offer more incentives compared to last year, but that is expected because you want to attract investors. You want to make the market more attractive, basically, for them.
Yeah. Could the second half of this year, I mean, we use this phrase bounce back ability for Dubai, and it kind of fits historically. There's the general attitude, I suppose. Could the second half of this year bring another, maybe even stronger rebound in transactions?
Is that a prediction that you're asking me?
That's called the crystal ball question.
Yeah, I always tend to say that your guess is as good as mine.
Right.
Now, the situation on ground at the moment is so fluid that if the situation changes next week, definitely you would see a better performance. But like I said initially, majority of your market is off plan. Within that, majority of it is initial sales.
Yeah.
So for you to keep that momentum up, you need new launches. Now, how developers react to the current situation is something that we need to see. Yeah. I wouldn't put in a direction to it because people have been predicting about the market for the last 2 years. There are analysts who have been saying that the market is expected to go down by the end of 2025. That didn't happen. Like I said, my guess is as good as yours. What you can do, on the other hand, is basically look for signs. That's what I tell young researchers. Rather than predicting what's going to happen to the market, look for signs in the market. And those signs are basically how much supply is coming into the market.
Right.
What's the absorption rate in the market? What's the pace in which new launches are happening? Are sales price and rental rates growing at the same pace as it used to? What's the number of rental contracts in the market? So you have to look at different indicators to basically gauge or make a educated guess on what could happen to the market. That's what I would tell any investor, buyer, or a young researcher for that matter. Look at these signs.
Yeah, it's still caveat emptor, isn't it? Buyer beware, I guess. The headline, though, is 57,000 homes in 120 days in the first 4 months of the year. Ali Siddiqui, research manager at the property consultancy Cavendish Maxwell. Appreciate you sharing your insights. Thank you.
Thank you so much, Tim.
Good to have you here.
Take care.
This is Mirror Business FM.